Hear me okay? Let me know. Welcome to the live trading session today, 31st of October 2022. Let's see as everyone streams in. I'll give it a minute or two before we get started. And if you're here, let me know, put it into the chat. Let me know why, if you can hear me okay, and you can see my screen all right. Just want to check my mic for that. Can you, hello? Okay, I think I need to, okay. Give it a minute or two as we get started. Good afternoon. How are you guys doing? As we get ready to get started, today is the live trading session, 31st of October 2021, 2022, Monday at 5 p.m. All right, so thank you everyone for joining us on this session. Again, welcome to the session. If you have any, what we'll be doing today is a live trading session. So I'll be looking through some charts. I'll be looking at a couple of big news to be released for this week, right? In particular, the RBA with the interest rate decision. We have the US FOMC with their interest rate decision, and also the Bank of England with their interest rate decision. All right. And then on Friday, we have the non-farm payroll. So quite a number of news to be had for this week. Might be a little bit quiet for today, but we should anticipate quite significant volatile price movements moving through the week. All right. So as we go through today's live trading or live analysis session, if you have any questions, please feel free to put it into the chat. Let me know if you have a question. I'll be happy to address your questions as we go through the session. With that said, a quick disclaimer: any information, context, or opinions which are expressed in the presentation and in the following slides are solely those of the presenter and not necessarily those of Vantage, and are solely used for educational purposes, as they do not constitute investment advice and or consultation on how a client should trade. Vantage does not guarantee the accuracy or reliability of the information provided herein. What it means is that I will be sharing with you some trade ideas. I'll be sharing with you my views and opinions of the markets and what could move prices in a particular direction. If you do jump into any trades, Please make sure you do your own due diligence, check your analysis, make sure you're comfortable with the way the trade or the analysis is going, and make sure you check your leverage and your margins, right? Because in my experience, what I've seen is that the biggest damage or the biggest hindrance done to any trades or any trading accounts is not so much a bad analysis on the trade. It's more about over leveraging, over trading um, onto the account. Okay, those over trading and over leveraging are the ones that damages the account to the largest extent. Okay, so again, please remember to do your own due diligence before we jump into any trades. With that, just a quick introduction of the team of analysts here. My name is Jin Dao. Most people know me as Jin. I'm one of the prop traders here. And I'll be, I've had 10 years plus of trading experience in the FX markets in particular. So if you have any questions, please feel free to let me know. I'll be happy to guide you through your trading journey, sharing with you my thoughts and opinions of the markets and what you could or should be doing. All right. So with that said, let's get started. Okay. As I was sharing with you, all right, we do have a couple of news to be released today. All right. So I know most of you already know me here. Let me just see a good question pop up. Hey, Ferda, dollar index, Germany 30 and US 100, please. I will get to that. But before we do that, let's get into looking, right? So the way I look at the news, the way I look at the markets is first I look at the news, right? I look into the news, look into the prices of what could happen, where could prices move towards. Then after that, I look into the charts to determine where could prices get to. Okay, so today being Monday, you can see we do have some news, but they're not big impact news at this point, because tomorrow, right? So tomorrow, you can see, on Tuesday, 1st of November, we do have at 11:30 a.m. GMT +8, the Aussie cash rate, right? The interest rate decision to be released by the RBA, expected to go from a 2.6% to a 2.85%. So a 25 basis point increase expected there in terms of the interest rate decision from the RBA. The interesting thing here is that while we're, in the last meeting, you can see in the last meeting, they went from a 2.35. They expected a 50 basis point increase. Didn't happen, only did a 25, went to 2.6. Okay, so it went to 2.6%. The talk before the October release was that will the RBA slow down the scale or the magnitude of rate increases? Expectation was that they were going to do 50 basis points in October, and then the subsequent ones from November onwards, they were going to do 25 basis points. They jumped the gun a little bit. We saw a 25 starting off. Anticipation here, again, another 25. But we are seeing inflation still quite high in Australia, right? So inflation is still quite high in Australia. The question here is that could there be a U-turn, right? A U-turning back to outsized hikes to gain control of hotter than expected inflation. Okay, so biggest question here tomorrow, well, biggest question tomorrow, not here, is whether the RBA, the Reserve Bank of Australia, is going to be increasing interest rates by 25 basis points, taking it from a 2.6 to a 2.85, or are they going to increase it by 50 basis points to a 3.1%? Okay, so a bit unknown there. Most likely we're going to see a 25, but there is a chance that we could see 50 basis points. If that does happen, then we're likely to see a bit, if we do see a surprise, 50 basis point surprise from the RBA, then we could see the Aussie dollar push towards the upside. But if we do see only a 25 basis points increase, then we're likely to see the Aussie dollar spike up a little bit, but overall continue moving lower, right? So I'll show you that on the Aussie dollar chart right now. All right, so look at the Aussie dollar chart here. Okay, let me just jump to my layout. So the, oops, that's not Aussie dollar. Take that away, clear out the lines a little bit. Okay, so the Aussie dollar right now sitting just below that 0.64 price level, right? It's at 0.6399. So just below that 0.64 price level. And you can also see that through Friday last week, it came down to hit that 0.6394, right? And then it bounced back up. So it hit that level, bounced back up, hit that level, bounce, tried to break lower earlier today, failed to, and now looking like a little bit of a bounce towards the upside. The key factor here, all the way leading into tomorrow, I'm anticipating for the Aussie dollar to remain, right? To remain between 0.64 and 0.6426. It's likely to trade within this range if, right, there's two scenarios here. If we see the RBA come out with an interest rate decision of more than 25 basis points, if they do a 50 basis point increase, then we're likely to see the Aussie dollar push towards the upside. Okay, so we're looking for that move above 0.6430, right? You're looking for the Aussie dollar to push. Let me see, where is it? Oh, wait, this is on H1. Let's look at an H4 time frame. Okay. So you're looking for the Aussie dollar to push at the about that point towards the upside. Okay, towards that next resistance level of about 0.6510. Okay, so what I'll be looking for here in this case is that tomorrow, again, if we do see a surprise 50 basis point increase from the RBA, I'll be looking for an upside move beyond 6425. You know, you'll be looking at a buying opportunity, say about 6430, 6432. Take profit about 75 pips, stop loss just below that level at about 20 to 30 pips or 25 pips there. You're looking at a 1:3 risk-reward ratio towards the upside. Let's say that if the RBA doesn't come out with a surprise, the RBA stays at a 25 basis point increase, what we're likely to see, like the last time we saw, or every time we've seen the RBA increase rates as expected, we're likely to see further downside on the Aussie dollar. So in that case, I'll be waiting for price to break below this 0.6394 or 95 level to push towards the downside. What I'll see is that the next key support level is just at about 0.63. Okay, so what you'll be looking for is selling opportunity below 0.6375, about there. Stop loss about 30 pips. Take profit about 70 to 80 pips. A 1:2.7 risk-reward ratio towards the downside. Okay, so we're looking for that move towards the downside. So just a quick summary again, what it means is that would be looking at a 50 basis points hike. Okay, if we do see a 50 basis points hike, I think it's most likely we're going to see it push towards the upside, towards that 0.65 level. And if we see a 25 basis point hike, then we're going to see the Aussie dollar push lower. It might fluctuate a little bit before going lower, but we're going to see it push lower from that 6.3 or 6.4 level towards that 6.3 level. Okay, So quite simply, that's the view for the Aussie dollar for tomorrow's news. Okay, coming back to the Forex Factory with the news, that's tomorrow at 11:30 GMT +8 with the interest rate decision to come from the RBA for the Aussie dollar. With that, remember we do have Governor Lowe speaking from the RBA. RBA board dinner. So I don't think that's going to be a big news event there. We do have a follow-up on the US, right? So you're trading the Aussie dollar and the US dollar. So we do have the JOLTS jobs opening and the manufacturing PMI numbers. You can see not a big change expected there. So I'm not going to think that it's going to move prices too much at that level. Okay. The next thing you're going to pay attention to is on Wednesday, 2nd of November, we do have the New Zealand dollar. We do have the New Zealand dollar with the employment numbers, right? So unemployment rate looking to drop slightly from a 3.3 to a 3.2%. Employment change quarter on quarter looking to grow from a 0 to a 0.5%. Okay, so we're looking at a little bit of a good news to come from the Kiwi employment numbers, right? A little bit of a good news to come from the Kiwi employment numbers. So if we looked at that on the Kiwi, right? If we looked at that on the Kiwi dollar, right? So that happened already. Right now, Kiwi, same thing like the Aussie dollar, trading right at that, just at that 0.58 price level. Okay, so I'll take that away for now. And we can see that it's trading right at that 0.58 price level. Okay, Kiwi dollar doing that right now. I think that we're going to see it fluctuate a little bit. It's going to be dragged around. Remember, the news is on Wednesday morning. The employment number news is on Wednesday morning. That's after the Aussie news. And if the Aussie does move significantly to the upside or downside, it's going to drag the Kiwi dollar with it. Right, it's going to have some influence on the Kiwi dollar. So I think it's going to move a little bit. But if we do see employment numbers improve, then if it stays at this 0.58 level, we could see some upside move on the Kiwi dollar. Right, we could see some upside move on the Kiwi dollar. I don't think it'll be significant because we've seen it test that 5862 level, right? Test twice and rejected 3 times actually. So it tested once, right? Tail and again. So it's formed a very strong resistance level at that 5870 level. Could be a move towards the upside, but I think it's going to be quite limited. What I would be looking for instead is if we're going to see the Aussie dollar drop and then the Kiwi dollar being dragged down together with it, right? If the Aussie dollar drops and the Kiwi dollar being dragged down, you can see this is a key level here. If it comes down, we might see a good move towards the downside on the Kiwi dollar, right? I think that we could see it come down towards this point. You can see that it's tested a couple of times here and more recently back at this point here, right? So 5729 or 5730, and then the next key level down is at the 5670 level. So what I'll be more tempted to say is that we could actually see the Kiwi dollar drag down because of the Aussie news tomorrow, right? It could come down towards that 5730, and then with a strong or more positive employment number, we're likely to see the Kiwi dollar push back up again. Okay, a little bit more volatile on the Kiwi dollar there. But again, bear in mind, as we look into the Kiwi dollar, last month, or well, not last month, in August, they were at 3.2%. Well, before that, they forecasted a 3.1 and actually increased Okay, employment change was 0, expected at 0.4, and it stayed at 0. Right, so employment numbers here on the Kiwi seems like the expectations or the forecast are a little bit hit and miss. Right, it's a little bit hit and miss. It's not always going to come out as expected, and actually from the last couple of times it shows that it's actually more likely to be wrong. So that is planned. This is in the event that we see the Aussie dollar push this down, and if we see a good employment number, push it back up. However, if we do see a disappointment from the employment numbers from the Kiwi, then we might see that continue down towards that 0.5670 support level. All right. So far, so good. Any questions? I see the dollar index, Germany 30 and US 100. I'll get to that next. All righty. No questions. Good stuff. So why I said I'll get to the dollar index next is because on Wednesday, we do have the employment numbers from Kiwi being released. We have the ADP non-farm employment change to be released. That's not going to be a big impact news because the big impact news is going to come on Thursday morning, GMT plus 8 at 2 a.m., right? The US federal funds rate, US interest rates, looking to go 75 basis points increase from a 3.25% to a 4%. Looking at 75 basis point increase from 3.25 to 4%. This is pretty much priced in already, right? This is a pretty much priced in scenario because they have been talking about it for a long time already. The only doubt that has come recently last week was slightly weaker than expected consumer sentiment numbers or consumer confidence numbers, which actually prompted the market to consider whether the FOMC or whether the Federal Reserve were going to continue with their aggressive rate hikes beyond this meeting. Are they going to keep doing a 75 basis points, or could they slow down? Right, slow down not in terms of the frequency, but slow down in terms of the scale of future rate hikes. So with that, that's why we saw the dollar index dropping last week. So looking at the dollar index here, right, I'll clear out the lines a bit. You can see that it pretty much went from that 113 level, got a line right across, 11350 level. It tested in October, failed to break higher, tested again, came back down, tested, and finally dropped very significantly, right? Dropped very significantly all the way down from 11350 towards that 113 or 109.53 level. Okay, so we saw that move from Friday 2 weeks ago all the way down to Thursday last week, and we saw that recovery. We saw that recovery back up to right now at that 111.10 level. Okay, to this point at 111.10 right now, just tried to break above, but it's retracing a little bit. So what could happen here on the dollar index leading into the FOMC interest rates decision on Thursday morning, GMT plus 8 at 2 a.m.? I think that, don't just pay attention to the number. Okay, in this event, sorry, I'm a bit sniffy right now, right? In this event, you don't want to just pay attention to that number because it's most certainly going to be from a 3.25 to a 4%. What you want to pay attention to is in the statement, right? So you can read the statement or get a summary of the statement to indicate whether, or to look for the FOMC to indicate whether they're going to continue with the current path of interest rate increase, or are they considering a slowdown in terms of scale, and what is the terminal rate that you're likely to head towards. Terminal rate is the final or the highest interest rate they're looking to get to before they stop and maybe start considering to cut interest rates again, or to hold interest rates at a certain point. Okay, so not so much in terms of the rates, in terms of the numbers, but what you're going to pay attention to is the statement and also the press conference that is held at 2:30. What's the comments are they looking at? All right, are they looking at further rate increases at the same rates, a slowdown, and what's the terminal rate? Let's say that, coming back to the dollar index, if they do come out at 75 basis point rate hike, but comment that they're looking to slow down on future rate increases, or slow down on future scale of rate increases, or they're looking at, sounding very hawkish, then we're going to see the dollar index drop very significantly. All right, I wouldn't even be surprised if it breaks below this 109.50 level. Okay, so if we hear a little bit of a dovish sentiment from the FOMC, we could see it drop from that 111.10 level. It's likely to trade within this range for now towards 109.50. And if it does break below 109.50, I'll drag this right across just so you can see 109.50 is quite a strong level. If it does break beyond this point, then it brings into view the next level at 107.80, right? 107.80. So if we do hear a dovish Fed, a dovish FOMC, we're going to see we could see quite significant downside on the dollar index, tracing back down from that 111.10 towards 109.55 and possibly even towards 107.80. Okay, this level here is quite strong because if I did that Fibonacci level down, where are my levels? You can see that it came up to test that 38.2 level, failed. Looks like it's failing to break above that level and likely to push back down again. Okay, so that's why I'm anticipating that, if I zoom this in a little bit, I'm anticipating that we could see price trade within this range over the next couple of days in the lead up to the FOMC interest rates decision on Thursday morning. So I'll move that to about Thursday morning, right about there. Okay, so we could see trade around this area in the lead up to the news, and then if it breaks lower from that point, we could see it come down to test 109.55 and also likely 107.80. This is if we see a dovish Fed. All right, but if we flip it to the other side and the Federal Reserve comes out and say, hey, we see that the prices or the consumer sentiment is weaker, but inflation is still high in historic levels. We need to tackle further inflationary growth or potential of further inflationary growth. They have increased it by 75 basis points, and you're looking to continue on with the rate increases until their targets are met. Then you're going to see that push from this level, from that 111.30 level towards the upside. Right, we might even see it go very strongly towards that 113.50 resistance level, with a bit of a hesitation here at about 112.50, which is also coinciding with that 61.8% fib retracement level. Okay, so we're looking for this push towards the upside with a bit of an area here then you might want to consider as a bit of a hesitation level there. Okay, so this is in the event that we hear the Fed Reserve talk about a rate increase, a 75 basis point rate increase at the current meeting. And if they do continue on to reinforce that they're going to continue raising rates until they meet their target levels, sounds very hawkish. So that would be when we see a hawkish Fed. We could see the dollar index break towards the upside from that 111 level towards 112.50. If it breaks that, then 113.50. Okay. So I hope I answered your question there on the dollar index with that view, currently at that point, either dovish view or the hawkish view, big upside or downside potential right across the board, driven by that dollar index. Okay. So with that, then we look into the next news. On Thursday again, we have the pound, right? The Bank of England with the pound interest rate decision. Official bank rate for the UK expected to go from a 2.25 to a 3%, a 75 basis point increase to come from the Bank of England at this upcoming meeting. I think that we're not likely to see a big move. We're still going to see a move, but we're not going to see a significantly big move, because prior to this news event, when we saw a big drop in the pound dollar because of the introduction of tax cuts, we saw the pound dollar, and I'll show it to you here. Right, we saw the pound dollar drop pretty much from that 1.1240 level straight down. This was the introduction of the tax cuts. We saw the pound dollar drop straight down towards 1.03 or 1.04 there before bouncing back up. Right, as that drops, right, so this was the introduction of the tax cut here, which we saw it drop very significantly, about a 900 pip drop towards the downside. Okay, a big drop towards the downside. You can see this doji here, this little candle here, indecision candle, is when the Bank of England released its intervention. Right, the Bank of England said that they'll buy unlimited or large-scale gilt, government gilt, which is bonds, to support the market, to provide some stability to the markets. And also at that point was when they mentioned that, or markets were anticipating that the Bank of England was going to increase rates by 150 basis points. Right, so at that point there, as we looked at further intervention from the Bank of England, markets were anticipating 150 basis points rate hike to come from the Bank of England. That was on 28th of September. So leading on to that, right, as it came up, it came back down again. We saw the introduction of a new PM, the reversal, the U-turn of the tax cut decision, push the pound dollar back up right now towards that 1.1553 level. Okay, so that's one reason why, as markets were preparing for a possible 150 basis point rate increase, right now we're only considering a 75 basis point rate increase. I think that this could be a very priced in scenario, right? Quite a priced in scenario, which means that what we could see here on a pound dollar, drawing that line right across, right? So that was a previous resistance level there. Oops. Okay, so we can see a resistance level there. Right now at 1.155053, what I would be looking for. All right, one more level here just to highlight. I would say that's my near-term support level. Okay, so I think that on Thursday, with the interest rate decision to come from the Bank of England, if they do a 75 basis point rate hike, what we could see is first a bit of a downward move on the pound dollar, right? Bit of a priced-in scenario, 75 basis point as expected. What we could see is the pound dollar trade a bit lower towards that 1.14. Looks like it's going to break that point, but come down towards the interim level of about 1.14, right? You're there. But I think that the overall trend, you can see that the pound dollar has been trying to push towards the upside. Zoom out a little bit. Right, it's been trying to push towards the upside there. Let me just do it a bit nicer. Bit of a trend line there. All right, so it's been supported with that trend line towards the upside. What I'm looking for is when it come down, almost test that support of that trend line before bouncing back up again. Right, so I think that we could see this push back up from that 1.14 level, turning higher of this support towards the next high point of that level there, about 1.20. Right, so I think that we might see some downside on the pound dollar, hit that 1.14 support level, hit that trend line, and then after that bounce back up towards that 1.20. This is all dependent on two things, right? Not just the pound dollar, but also what happens on the dollar index. Remember, we just spoke about the dollar index. If we do see the US increase rates and the FOMC being quite hawkish in terms of the rate increases, then we might actually see the pound dollar trade quite significantly lower, right? If leading up to the news or before or during the news, they come out and they increase rates, they were a bit dovish on the view. We see the dollar index weaken, then we could actually see not so much of a drop, maybe a smaller drop towards the 1.14 or 1.15 level before bouncing back up again. Okay, so I think overall the scale of this move driven by two things. One is the dollar index. Yeah, we're going to see a stronger or weaker US dollar to drive the pound dollar first, because that's happening early Thursday morning. And then after that, on to the Thursday night, when we have the Bank of England with their interest rate decision, pushing, well, first dropping a little bit before pushing back up again. Possibly, I think right now the target level for the pound dollar is at 1.20. Okay, so what that means is that looking at the pound dollar, if we look at the German 30, right, it came up to test this 13.3 about, let me zoom in a little bit, 13.377 level, retracing a little bit back down now. Quite interesting is that it's almost at that same level, right? So this one broke up a little bit, tested 13.568 before retracing back down. In August, end of August, it tested 13.370 before tracing back down again. Right now, testing that level, I think that we could see it come back down with a few key levels to pay attention to. what you want to note is that we might have one key level here at about 13,000, right? Just above that 13,000 level for price to come down to test this point. We can see a bit of a consolidation there before, okay? And then if it does break below this point, move it a little bit more this way. All right, so you can see that tail there, it's about 13,000. And then if it does break below that point, then we're going to see the next tail at about 12,800. And then possibly again at 12,564. Okay, so I think that we could see that big retrace back down, similar to what happened here in September and in August. Could it break above these levels? Could be possible, but you can see that the last time it broke above this point was in August, very short-lived before it turned back down. And the last time it broke down from this point was back in June, where it broke, and it since then has failed to break above again. So what I'll be looking for here is that rejection of that level to turn towards the downside. All right. I'll answer your question there further. And then the next one, where is it? The NASDAQ 100 just bounced around. Let's take that away for now. You can see that the last key level, or the current key level, hang on a second. The current key level is at 11,500, between 11,500 and the 11,700 level, right? Good, strong resistance level there because it's hit, failed to break higher, turn back down, hit, failed to break higher, turn back down again. What it looks like here at this point is that we could see a push towards the downside, but bear in mind, whatever happens on the dollar index with the FOMC interest rate decision is going to have an impact on the equities market as well, right? Not just the NASDAQ 100, but S&P right across the board. We're going to see quite a bit of volatility with the news on Thursday morning. Okay, so just remember that as at this point, if we do see a bounce in the or upside move in the dollar index, then we're going to see this push towards the downside, possibly towards the next or the round number support level of 11,000. Hey Vijaya, the this is recorded. So I think it'll be uploaded onto YouTube. It's probably streaming now as well. So if you have any questions, please feel free to leave it into the comments. I'm sure that we'll check that and get back to you. All right. So as it comes down, NAS 100 could come down, similar to what happened here over the last couple of times, right? As it breaks from that 11,500 level to head towards the downside, I'm looking for it to come down to test this 11,000 round number support level again. Okay, so quite straightforward there. If we do see that hawkish dollar index, if we do see if we do see a hawkish FOMC leading to the strengthening of the dollar index, does have that little bit of the inverse relationship with the equities markets, and then we could see this push towards downside. If it does break towards upside, next key level 12,000, and then beyond that, I would say that we have another level at about 12,500. So I like the nice round numbers there on the equities markets. But I think the more likelihood is for a retrace towards the downside. All right. And then back to the news again. In terms of the news, what else could happen on Friday? We do have the US non-farm payrolls number, but not very good news here. Unemployment rate looking to increase slightly from a 3.5 to a 3.6%. We're looking at a possible increase or slight change in non-farm employment change numbers from a 263K to a 200K. All right. What's the relationship between interest rate hike by 75 by BOE and pound dollar goes down? I read somewhere that the Fed Reserve rate hike is good as dollar value goes up, but the same is not true. Okay, so why, coming back to the question here on the pound dollar, why do we think that it's going to value to go down? Firstly, I was showing that there was some thoughts during the intervention here from the Bank of England. At this point here, markets were anticipating 150 basis point rate hike to come from the Bank of England, right? 150 basis points. So now fast forward to the news decision on Thursday, with only a 75 basis point rate hike expected. Slight disappointment, and it's more likely a priced in scenario because it's been projected for so long already. So why I think that it might drop a little bit, right? I don't think it drop all the way. I think it'll drop a little bit before bouncing back up again, is because we're going to see a priced in scenario, in the sense that a lot of people might have been buying into the idea or buying into the forecast that the Bank of England is going to increase rates further. And then that's why we're going to see a big push towards upside. So they got in early. What's going to happen is they're going to close out their profits. You're going to see price drop a little bit before a push back towards upside. Very similar to what happened here on the euro dollar. All right, so I'll show you the euro dollar here. And then back to the news on Thursday last week, right? So euro interest rate increase went 75 basis points from a 1.25% to a 2%, 75 basis point rate hike from the ECB. And on Thursday, what we actually saw was that as the news got released, right at that point, it dropped, right? So it was at that one point, we can see that big push towards the upside in the lead up to the news, because markets were expecting that rate hike already. They've been pricing it in. And then as it got released, we saw the euro dollar drop instead of pushing up. Despite a 75 basis point rate hike, we saw the euro dollar turn down. Okay, so I'm expecting something similar like that. You can see that in the scheme of things, the euro dollar dropped about 135 pips towards the downside. Is it going to push back up? I think a little bit differently than the pound. In this case, we might see further downside, but on the pound dollar, looking for this to come down. If it does come down to that support level of about 1.14, it's about 160 pip move towards the downside, or even slightly, then it'd be about 74. So we're looking at 74 to 160 pips towards the downside before a bounce back up. Quite similar. First move towards the downside, quite similar to the euro dollar, the interest rate decision on Thursday last week. And then that push back up, because we're still seeing that trend line support. We're seeing that push back up on the pound dollar. A bit of a quick reversal or sustained reversal on the pound dollar. Hope I answered your question there, Vijaya. All right. good stuff. So with that, then coming back to the where was it? The non-farm payroll number, looking at a bit of a slight disappointment there. Looking was 3.7, expected 3.7, came down to 3.5 in October. But then now in November, we're looking at a possible increase from a 3.5 to a 3.6% in terms of the unemployment rate. So what could happen here is that, it all depends on what happens on the dollar index, right? So, stay out of it for now. Don't do any pre-analysis, because it could all change based on what happens here on the dollar index with the Fed funds rate, 75 basis point increase. If we do see a 3.6, a bit of a weaker employment number, but non-farm employment change numbers stays strong, then we could still see further dollar index or further US dollar strengthening across the board. Right, we could still see further dollar strength across the board, but bear in mind that on Friday, 8:30 GMT plus 8, we also do have the Canadian interest rate decision to be released, unemployment rate and employment change data to be released from the Canadians. Unemployment rate has been dropping from a 5.4 to a 5.2%. So we're possibly looking at further downside, together with the employment change number. A bit of a mixed data there so far. So, I'll be a bit more cautious there. What I'll always suggest is that on non-farm Friday, particularly when we see an employment data from the Canadian and also employment data from the US, really should be avoiding to trade the US CAD on that Friday, because what you could end up with is a total mix data between the US and the CAD, and then you're going to get a lot of tails and spikes, right? So I'll just check October 7th and September 9th. October 7th. So you can see that on October 7th, where is it? Right, on October 7th at the time here. Okay, zoom it in. You can see that a lot of volatility, tails and spike. This was when the news was released, right at that point there. Okay, that red candle there, and you can see that it spiked down, spiked back up before the news. In the lead up to it, didn't have much clear directions all the way till Monday into the week after. Okay, so a lot of price volatility, but no clear directions when you get, both the non-farm payrolls, the US non-farm payrolls, together with the Canadian employment data being released at the same time. Okay, so what I would best suggest is to stay away from the US CAD for the news. I think that if we do only pay attention to the US employment numbers, that's going to give you quite a number of good trading opportunities already. All right. So with that said, do you have any further questions? We've gone through all the news, all the major news events for the week, giving you the preparations for the Aussie dollar with the interest rate decision tomorrow. In the lead up to that, we also, after the interest rate decision from the Aussie dollar, we do have the employment numbers from the Kiwi. And then the key event for the week, the US interest rate decision on Thursday morning, follow on with the interest rate decision from the Bank of England on Thursday evening, and then on Friday, the non-farm payrolls to be released for the US. All right. So please remember, in the meantime, as you are trading these news events or in the lead up to these news events, please trade well, trade safe, manage that risk by checking and double checking on your leverage and the margins, just so that you're not over trading. And also what I would best suggest is, if you're trading during the news, size it down, take a little bit less risk, size it down, just so that in the worst case scenario, you're not going to get a massive hit to your account. Okay. So with that, without any further questions, I'll go and enter the session. Hope you trade well, trade safe, and take care now. Bye bye.